Hey guys, welcome to this episode of Money Talks with Mohankrishnarao, where we ask the tough money questions and get real answers. And today's hot topic is AIFs. Sounds complicated? Don't worry, I've got backup. Here with me is financial economist, the man who makes money less frightening, Mr. Mohankrishnarao. Hello, sir.
Thank you, Niti, and hello to everyone watching here. Let's make this fun, shall we?
Sure. So, alright, sir. First things first. What is this AIF? It sounds like a top secret government agency to me.
Honestly, it does, but it actually stands for Alternative Investment Funds.
Okay.
Think of it like this. Mutual funds are for the masses and AIF is for the classes.
Okay.
It's where wealthy investors put their money when they want higher returns, exclusive deals, and don't need instant access to their money.
Okay. But what are these AIFs investing in? Gold-plated unicorns?
They basically invest in things like startup real estate, private debt, venture capital, and stuff that you and I can't access on Zerodha or Grow.
Okay.
But it's not wild gambling. These funds are professionally managed and SEBI regulated.
Okay, so why is everybody buzzing suddenly about AIFs? Did it go viral on TikTok or what?
The stock market is volatile. FD gives 7% and people with rupees 1 crore or more want steady higher returns like 15 to 19%. And some AIFs even give monthly income payouts.
Okay.
It's like getting rent but without tenants or the leaking roofs.
Okay, now spill the tea. Give us a real AIF example. And please, in human language.
Done. There is a fund called Venture Debt Fund. Here is what it does. It lends money to high growth startups, charges them 22 to 25% interest. You, the investor, get 17 to 19% per year.
Okay.
Payouts every month like a salary for your capital.
Oh.
It has already delivered 1.2% every month for the last 18 months.
Oh, so you mean to say that my money gets a monthly salary? I like it, but it sounds too good. I want to know what's the catch. Because if it is too good, why isn't everybody investing in it?
Because you need to invest a minimum of 1 crore rupees.
Okay.
Or if you are an NRI, you need to invest minimum 150,000 in US dollars.
Okay.
There's a 5-year lock-in and it's not liquid, no panic selling, and you need to understand the risk-return equation. And this is for people who are already financially comfortable, not someone savings for next year's EMIs.
I get it, sir. But what about our NRI folks watching from California or Canada?
This is perfect for NRIs. You can invest in USD, get monthly payouts in USD, no real estate headaches, and you're putting money into India's fastest growing startups without equity risk.
Oh, that's great. But, so sir, this is my final word. So let's say I have got 1 crore lying in my bank account and I don't want to buy another flat in the nearest future. Is this worth considering?
If you are okay locking your money for 5 years and want peace of mind plus passive monthly income, then yes, absolutely.
Okay.
Just make sure you understand the terms, work with an advisor. Don't put all your eggs in one basket.
Oh, that's great. Alright folks, if you want to explore this further, book a free info session in the link given below or WhatsApp AIF to 63640 50500. Whether you're in Bangalore, Boston or Bahrain, this could be your next smartest money move in 2025.
Thanks Niti, this was fun.
Same here, sir. Let's do one next week on ABC. It's not anybody can dance. It is anybody can invest in stocks. Until then, stay tuned. Bye.